All right, guys. So we talked about building your deal funnel, getting deals, and growing your company. But in order to do that, you are going to want to set up your company correctly. So I've got a few different slides here in this module that I want to show you and kind of visualize how you should think about setting it up. And this isn't, legal advice, right? Talk to your attorney about this, but this is how I have done it. This is the advice my attorney's given me so I can have the separation of, liability and also bank accounts and everything needed to successfully run the property side and the operations side, because what you're going to want to do is build the in-house management so you can control more and have another revenue stream as well. So that's what we talk about, is how to build up that side as well. So it's not just buying the real estate and hire the management company. So I wanted to start with visualizing from the top level, like you and your partners are going to own the entities, right? Like your ownership interest. Maybe it's you having 100%, like mine is right now, or maybe you have a partner that you're going to be 50-50 with, or a third, like whatever that looks like. That'll be your holding company. And then everything that holding company owns, like the different businesses, will flow down to your ownership interest. So that's what we're talking about at this level. See if I can bring out the drawing. So this level, there we go, at this level right here. So that's where you guys are going to have your ownership interest, and that is going to flow down to both your propco and your opco. So that's what we're going to talk about, in relation to this. Is your property company owns the real estate, your operating company manages the real estate. And then for the propco, what that, like for me, that's Stavest. So Stavest is my property company that will own all of my interest in the real estate. And then we'll see in the next slide how that will flow into our investors are going to own some of this. I'm going to raise capital to own that real estate. And then how that separates from the operating company. So the propco side, that flows down into each property level LLC. So each one of these are their own LLC that is owned by your propco. So if you say did a 50-50 split with investors, your propco would own 50% of the property, your investors would own the other 50%, and that's your operating agreement that would outline all of that, your ownership interest. So that's big level business structure. So you get your holding company, propco, opco, and on the propco side, it owns all your individual property LLCs. So going into the next slide. So this is where it kind of breaks down on the propco. So essentially, your propco is right here at the top. So this right here is essentially your propco. So that'll be composed of your sponsors, which is going to be you, and your investors. And that is going to own this property level LLC, which is your propco. And then this will essentially be the property itself. And you have a signed management agreement with your opco. So that's how your opco comes into play with this, right? And when you do a management expense line item on your, property pro forma, that management expense is what's going to go to your operating company for managing the propco. So you'll own your percentage of the propco, then you also own your percentage of the opco as well. So you'd be able to split both of basically the cash flows and have two different revenue streams. And this is how you set that up. You bring in your investors, you have your sponsors that own the property level LLC. So let's get all this out of here. And then very similar, if you do a lease option, it's essentially the same thing. Your sponsors and investors will bring in the capital needed to get the property LLC. And this won't be owned in this scenario, but your opco, which for me is, Explorant, giving that as an example, will sign a lease agreement with the propco LLC. So then the tenant is your opco, the owner is the landlord that you're leasing from, and you would give them lease payments every month, similar to how your debt service would be if you actually own the property. And then what you also could do further on, this is where it gets a little bit more advanced, but you could buy the property and then lease the propco to your opco, and your investors would get paid back based on the lease payments. So they'd have, essentially a fixed income stream coming in to provide them, a return on their investment. They still get the tax benefits, the all the appreciation, everything that it involves, but they're not going to have all of that upside. So what you need to do is, have a track record with your opco, because typically these leases are like guaranteed by the business, or in this case, the opco. So you need to have some operating history. So at the end of Adventure Stays last year, this is the structure that we looked at, was buying the propco with investors and leasing the property to Explore. So that Explore would keep, or excuse me, Adventure Stays in that scenario. Basically, opco would keep the upside, and we pay a fixed payment to the investors in order to hit their, 12, 15, 17% IRR and all, the cash on cash return that they would need to see in order to make that investment worth it. So it's just an advanced strategy of you buy the property, lease it to your opco would lease the property from your propco, and then you'd keep the upside on the operations rather than, splitting the upside with your investors. But you need the operating history to be able to do that, because it's going to be guaranteed by that company, especially if you're doing so on a professional level. And then similarly, if you would just lease the property from the landlord and you're not buying it at all, you're just doing a straight triple net lease option deal. Similar structure. What that means is the same structure, just depends on, if you're buying the property or not. And then the org chart for the opco, this is where, it gets a little bit more detailed of the people you need in place to actually run and manage the property. So at the top, you're going to have, you, likely director of operations manager. This is how I have it set up. You could, take off this, spin off of it, however that you would need in your own business, but this is what I found that's worked best for me. So the director of operations essentially runs the day-to-day, and the operations manager really helps on the back end operations to make sure the listings are up and running, right? Payments are being made, Stripe accounts, payments are going through, like all the little nuanced things that you need to ensure are happening. And the director of operations is more involved with the actual, the property managers and the actual on-site operations of those properties. The operations manager is more back end. And for us, this operations manager is a virtual assistant. So, these don't have to be like people that you're like bringing on that are in the US that you have to put on W-2 and pay payroll taxes and pay high salaries and stuff like this. You can fill in these roles with a mix of VAs and US based labor, like we do, and we've found that works well. So this is how my opco is set up right now. You can take from that as you see fit. But on the big kind of functions are your like sales marketing, your property level staff, then your finance, your bookkeeping, your underwriting, stuff like that. And then I would call this like the guest experience or the guest relations function. So that's going to be your guest experience manager, making sure that, from check-in to check-out, everything that guest experiences and goes through is, conducive to a good stay, that like the automated message threads are working, that guests are being taken care of, their quality, controlling the, the phone answering and the guest message threads and all the things that the guests interact with, making sure all that goes smooth. Then your head of e-concierge is the one managing the actual messaging and the e-concierge team. Then you have your e-concierge managers who are answering the phones, they're sending the messages, they're relaying information from the FAQ page when guests ask questions and stuff like that. These are all virtual. For us, the head of e-concierge is also like one of the e-concierge that's been with us for almost 3 years now and just promoted up, really knows their stuff. So it just allows you to kind of picture the pieces you need to put in place. And then for CFO, we have a fractional CFO who works with different businesses, but really helps us a lot. And in that is the bookkeeping. And then if I wanted to put it in here, also the accounting, for the tax returns, the cost segregation, all that stuff. It's kind of an integrated team there. And then for each property manager staff, this is what or for property level staff, this is what I built out for like the new hotel, but you'll have general manager for this hotel specifically on the property. I also have the wedding and event manager, front desk, assistant manager, housekeeping, maintenance, all of that different stuff, all the people that you need on site. And for past properties that were limited service, automated check-in, right? They would just show up to the hotels, check in, use the amenities that were on site for what was there. Didn't need as much staff, but those included like property manager, assistant property manager, and maintenance. And then we had our back end team with the concierge and everything. So this can adjust based on the size and scale that you're at or what you need to, fulfill the property that you're going to be buying. And then marketing and sales, this includes stuff like your social media marketing, email marketing, like all the things that you need to be able to fill your rooms and drive traffic to your listings. Revenue manager falls under that, and then room and event sales. If you have that at a bigger hotel, maybe might be answering phones to help people book rooms or booking group events. So that's what I'm going to include for this larger property, but you probably won't need that. But revenue manager definitely will. So that's like a role that I'm currently holding until we buy the new property. Then I'll outsource that and then put a new person in place. Marketing, kind of same thing. I'm doing the email marketing, the social media stuff. So essentially I'm wearing all these different hats, but it's good to break it out to see what you'll need to what positions you'll need to fill in place. Like right now, you might be you're fulfilling or wearing a lot of the hats or all the hats maybe on this org chart, but it's important you draw it out so you can see, all right, what pieces take the most amount of my time that are lower value. For me personally, like I should be focusing on, or like for you in this case, should be focusing on revenue management, on the deal acquisitions, on the due diligence, on broker relations, those different higher leverage tasks to start to outsource and put pieces or put the people in place for your e-concierge team or your operations manager or your social media manager, different things like that. So that's how you kind of break it down from big picture, how we're setting up our business from day one, right? Holding company, PropCo, OpCo, and the PropCos will own all the different LLCs. Then how you structure your actual deal with your sponsors and your investors rolling down to that property level LLC or that PropCo. And then how your OpCo interacts and has a relationship via the management agreement or the lease agreement, whether you're buying or leasing the property. And both, like we talked about in the last modules, you can focus on triple net leasing, you can focus on acquisitions, or both fill the top of the funnel with more opportunities. You're just knowing how you're going to structure that. And then finally, how your OpCo fits into this piece of all the different pieces you need to put in place. Because your PropCo, your property company, is much more simple, right? You got like underwriting, you've got asset management, acquisitions. It's like those big pieces are probably what you and your partners are going to be doing. So it's much simpler. So I wanted to break down this OpCo organizational chart, which is much more involved with the hospitality operations and all those pieces you need in place. So all this was helpful for you guys to see how the pieces fit together, how your PropCo and OpCo, interact and really feed off of each other by getting properties and managing the properties, and how really you can grow the value and the size of your OpCo without actually needing the PropCo. With buying, you can lease, right, and still build up the value, build up the income, build up the cash flow of your OpCo managing different properties. So hope this was helpful. If you guys got questions, we'll talk about them in our group sessions and continue on to the next module. Now, an important part to note is that you have a PropCo and an OpCo, so that way you can separate the direction, the vision of each of those businesses. So PropCo is going to have different, goals and KPIs and, a little bit different structure than your OpCo, right? That one is going to be more towards managing the real estate. So your PropCo, you set that up to be investor facing. That'll be, property facing. You talk to, insurance, talk to brokers and agents and bankers and fund your PropCo. So you're raising money into your PropCo, and then your OpCo is guest facing. That's the one that you have your direct booking website set up for. That's when you email market through. So you have to set up those two different structures. And we previously had it together on our venture stays. It served as the PropCo and the OpCo. And we're kind of limited of like, all right, we need to set up a new entity that's like Adventure Properties. And the Adventure Stays will be the management company of that, so that we could raise money and have the separation of liability and separation of ownership and have a clear structure of who's going to manage what. So when I broke it out, I sold the company, started the new one. I broke out StayVest as the PropCo and Explorant as the OpCo to manage all the real estate that StayVest owns. So that's why it's PropCo is investor facing and OpCo is guest facing, and you set those up accordingly.